Maintenant, on va avoir vraiment le plaisir. Je voudrais, en mon nom personnel et en votre nom à tous, le remercier très vivement parce que non seulement il s'est donné la peine de venir, mais il s'est aussi donné la peine de faire un document spécifique concernant la réforme du système bancaire tunisien et les contraintes potentielles ou les contraintes les plus importantes à la croissance de l'intermédiation financière. J'ai parlé de si Achraf Hamed, qui est directeur du risque contrôle à l'UBS, qui s'est déplacé spécialement et qui a fait une réflexion vraiment très pertinente. Il va la présenter tout à l'heure sur les thèmes qui nous concernent aujourd'hui sur l'intermédiation financière. Il fera son intervention en anglais, donc il y a des interprètes et il y a des casques qui sont mis à la disposition à la disposition de l'auditoire. Do you assess the situation? How do you evaluate the situation? Especially, we know that you are from Egypt, and in related with the Egyptian case, and if you really think that the Egyptian case can be a source of inspiration for us.
First of all, thank you very much for hosting me today. Thank you, Mr. Chairman, for the brilliant presentation. And I'll take your question first about Egypt. You started the revolution in Tunisia, where we followed up in Egypt. We moved on with a constitution that you can look at the positives and the negatives. We can look into the positives and then more. Okay. We can look at the positives and negatives from the new constitutions we had. We had a president now that you can look at the negatives and the negatives, because I can hardly find a positive. So in many ways, I don't wish the Tunisian example to take inspirations too much from the Egyptian one. I think the features of political risk might be same. The Islamic factor is the same in terms of the dominance of the governments. The economic context is completely different and needs to different solutions. You can't have one suit fits all. So reform is not about finding a very good example that worked in X country and coming to implement it for yourself. It's important to understand what really drives you, constrains your growth, how you can direct a targeted reform to deal with what I call priority constraints that you want to deal with without too much jamming the economy. In many ways, I'm going to start looking at few charts. This is quite academic, but it mainly looks at a couple of things why there is a slowdown in the economy. The projection for the Tunisian economy is to look at 4% growth. In an economy that got a fairly small GDP relative to the MENA region. The MENA region GDP is about $2.85 trillion. Here we are talking about the $35 billion of GDP. The GCC in the MENA takes around 40% of that GDP. I'll exclude the 40%, so we will look at only 1.7 trillion of GDP, so to make a fair comparison. Still, Tunisia within that is just 2%, which is fairly small if I want to compare it, for instance, for an economy like Egypt. And hence why the complexity in the Egyptian model is much more than the complexity in the Tunisian model. I heard a lot of people today, including the government, criticizing the bankers, criticizing other authorities, the bankers. This seemed to be sort of a blame game. I apologize for being blunt. It's very important to realize that those bankers, whether on the public sector or on the private sector, have shouldered the burden of this economy over a number of years. So it's very easy to criticize public sector banks and the bad practices there and the high non-performing loans. But I think you ought to look at, yes, you are in short-term difficulties, but what do you need to get out of these difficulties rather than debating it? all the time without taking real actions to deal with the problems. So I'm going to put my theme into two things. Politics is not an obstacle for reform in most of the cases. And I'll give the Indian example. Over the last 15 to 20 years, the Indian government has changed a lot of governments, all of them with different religious and different ideologies. But the banking sector has progressed well in terms of reform. They had a model, they stick to it. No matter which government comes with whatever ideology they have, they stick to the model. And that's why they are where they are today. I'm going to look into the two main factors. One is it low economic return or is it cost of financing? I'll pick the cost of financing quickly. And I'm sure you are all familiar with the problems. I'm not going to spend too much time highlighting the problems, but much more into how to deal with it, from my point of view. The first one is much more about domestic savings. So I'm going to, which is the right-hand side of the high cost of financing. Underneath it, there's two boxes. One is domestic saving, one is intermediation, which is the banking sector. I'm going to be focusing mainly on banking sector. So if I may ask you for the next slide, please. The interesting thing in this one, if you look at the 11, that's 2011 and 2012, gross in domestic saving in banks. The two ones, that's a monthly progress, and then annual, you find on red, 11% in 2011 versus 2010. Then 2012 is about 13.5. And this is the interest rates as per the central bank website. So clearly, although I understand why the central bank increased the minimum fixed remuneration rate from 2% to 2.5%, the reality is your interest rate is already, real interest rate is negative. And is the solution really going through increasing interest rate to regain confidence in depositors keeping money in the banks? Might be a short-term solution, but you're not really dealing with the real problems. There are problems in inflation. You might record it as 6.5, and it's a bit like Egypt. Sorry, I'm going to refer to Egypt. When we actually report inflation, which is about 10% and sometimes higher, we know in reality and on the ground, we have a double-digit and high double-digit inflation. So again, it's not all solutions can be monetary solutions. You need a coordination, and the reform has to come through monetary, fiscal, and external sector. The three has to work together, support and reinforce each other to be able to really put your legs on the floor and say, okay, this is my first step to progress. So it's not really the domestic saving problem. So let's look at intermediation, which is the next one. I'm going to share you interesting statistics. Actually, I was quite surprised by seeing it myself. What's more interesting in this one, I'm going to tell you, don't believe all what you see. Numbers can be deceiving sometimes. The story is actually, it's a bit like a credit officer going to due diligence with a client. You look at the numbers, the bank might look great. When you exit after the due diligence, you know it's not that great story. Here you got total loans, that's loans to the banking sector has been supporting the economy over a number of years. So if you look at the growth rate, so I'm going to pick up, sorry, on a couple of, we look at 18% here, then 12.6. So all what happened here, the bankers are trapped. They have a liquidity issue. They are undercapitalized. And I'm going to put two lines under undercapitalized because on paper, you would look at the over capital in the banks and overall assets. Overall capital is about $5.8 billion on an asset base of about $42.5 billion. So simple math is about 14%. Looks great. Reality is there's huge, what I call underreported NPLs in the system and under-provisioning. And hence the capital cannot sustain those levels adequately. Not in all banks. I'm just going to be focused on in the majority of the banks. Because there are banks in this system that are well capitalized. And they do want to change, but they need some support. So I'm going to go a bit back to one of the charts of the interest rates. The central bank governor today made a great speech. And I've had the pleasure of sitting with him yesterday to discuss a few of the points. And one of the points, I'm going to share it with bankers, being a banker myself, is you cannot increase the deposit rate and not lift a bit the cap on the lending side. Because all what you're going to do, you're going to weaken your banks more. The clients, there is a level where you can pass the interest rate to the clients, and you delay it for 6 months or so to do that, but that's another problem. So you're asking your banks to really absorb that loss from their shareholders. If I'm a shareholder of a bank, I won't be pleased, a private bank, because public banks are run differently. In fact, they are forced to take decisions in many ways, because the government just forced the decision. I heard Mr. Habib this morning, and the question was about passive participation by the banking association, and I think I'm quite surprised to hear that, to be honest, because I would have expected there is much more in an economy that's open, and I do agree with you. There's a lot of openness in this economy. You're open to a lot of international players, whether they are Gulf or French or others. I can't see much added value from them. I'm being honest again. The burden is lifted by the public sector and few of the private sectors in the economy in terms of lending. But when there is a liquidity facility that the central bank is providing, and I find the Gulf Bank going to use the same facility, that's unfair for the local banks. That's not the mandate to bring people. The mandate to bring people should have been adding value, and how you're going to add it, and how you monitor that progress. To really bring them to train their employees, add value to them, because that's how you're going to enhance your potential as a banking sector. So it's not about bringing new people to compete with me. I need people who can compete and complement the whole picture. So overall, lending looks to be reducing, but it's a factor of nature of the economy and lack of trust and confidence. SMEs is one of the areas I would like to talk about very briefly. MENA statistics says lending to SMEs is just about 7% of total loans. That's the whole MENA. In Africa, this is about 9 to 10%. So the numbers are really small anyway. In all of the MENA, Tunisia is not an exception. And there is a lack of confidence in the model of SMEs. Unfortunately, or fortunately, I think a lot of people miss the opportunity sometimes with SMEs when it's a great sector to lend to, actually. There is decent return, and actually it's a risk-based return. You might lend, you have to offer your SMEs, you're not offering them the products they need, because you ask for personal guarantees and others, they cannot deliver those. You have to build, which I echo the governor now, a risk-based pricing. Take the risks, analyze it, be confident in your risk analysis. Trust your risk guys. Debate it with them. But you have to get out of the suit of everything has to be guaranteed, personal guarantees, and this is not going to work in the new world. If you want to attract growth, you have to price your risk properly and take more risks. I'm going to move very quickly to other areas before, which is the previous one. Thank you. This is the other factors that might restrict the growth of the economy. If you have a poor infrastructure, I think I'm looking into the Global Competitiveness Index, which most of you will be familiar with. And Tunisia is ranked 40. I think that's a good rank. I can tell you Egypt is not even close to that. So this is 142 countries that are assessed, and there is an ease of doing business, and where that actually Tunisia also lies 50, which is a great ratio. This is the classification of Egypt among most of the Arab nations. When you find, for me, interestingly enough, the United Arab Emirates was the top, which is, I think the sheikhs there are having the funds to allow this to happen. Unfortunately, Tunisia is not in the same boat. So it is not really infrastructure, I think the problem here is the lack of consistency across the country in infrastructure. So it's not the same in the south as in the north. And that's what the development projects need to focus on. Political. This shows you, a lot of people complain about politics in Tunisia. And I think if you look at the Egyptian politics, you will feel that you have really achieved a lot compared to the Egyptian model. We have, and I'm not going to go to talk about religious issues here, because I think that's not the topic of today. But both countries had a very bumpy ride. One is easier than the other, and I think Tunisia, when I said the context is different and the reasons of the revolution might appear on the surface very similar, but in fact in Egypt it's fairly different than the Tunisian case. Economically, Egypt is like a patient with a cancer that keep taking aspirin. Tunisia is a patient with a cold rather than a cancer, in my view. I think you should be proud of what you have done over the years, rather than blame it on the economic sector, because if you look at the external refinancing, your next debt is due in 2017. You still have time. Your government debt is about 46% of your GDP. It was 40.8 in 2010. So you are not far off the mark. You did not deteriorate that much. You already signed an agreement with the IMF. It's yet to be authorized by the board at 1.75, 2 years standby. Egypt is not even close to the 4.8 billion one. And unlikely in the short term, given what's required for the reform. So you have achieved a lot, but that does not mean you stop where you are. And it's important, and the question to the central governor was, how are you going to use those funds? Is it going to sit in your reserve, or is it going to be helping the public wages to be increased? It's important that this money goes in the right pocket to make the economy run, rather than give it to satisfy social, political reasons that adds no value to this economy and will add nothing. I am wary of a year where there is political elections and the pressure, political pressure that might come at the back of such a year to invest a lot to please the public in order to win elections. We'll talk about lower probabilities. And in those there is macro and micro. We talked about corporate governance. I totally agree with most of what you said, actually. I think if I would guide you to any corporate governance model, and it is weak in Tunisia, there's no question about that. And executives and board members should not look at improving of the corporate governance as obstacle. In fact, they will benefit the most if they are open-minded about it and they are prepared to do it. Much more into the government corporate governance than actually the banking corporate governance. I'll offer you something like closer to the Brazilian model. And the Brazilian model is a model that started with a lot of problems, much more than people might imagine, actually. And in those, they just made a very simple 6 indices. And they are proxy to monitor those regularly. So the 6 indices basically looks at the board structure, procedures, intergroup lending, and correlated lending to the shareholders or the management. The ownership structure, the disclosure level of what they provide, the payment checks that goes to each one of them, and is it really, are these guys fit and proper to run banks or other institutions within the government? These are quite important. These are when I say there's no one solution for all, but you need to copy others who have actually progressed in their model on those. Then I look at the macro. The persistent large current account deficit, I think this is something structural. You're tied to a great extent on the export market to about 3 to 4 countries. These 3-4 countries makes about 58% of your exports. They are all EU. And as mentioned earlier in one of the speeches, the EU is not going through an easy ride themselves. So the implication is going to continue negatively. And unless there is a coordination, this is not just banking sector here. This is a Ministry of Foreign Affairs, this is a Ministry of Development, this is other ministers that need to sit and talk about how to help the businessmen in this country to go abroad in Latin America, in areas where there is growth, where they can start lending, and the banking sector to be able to finance them and support them without any forex restrictions. So we have to liberalize and make the market quite deep and allow, without a month of central bank approvals, to go and lend abroad. So let's talk quickly about what is targeted reforms, what it needs to achieve. Can I have this? Another one? No, the one previous one, please. I'm not going to go to read all of that, but for any reform, you need objectives, and you need way forward. In a nutshell, what you need is to, from any objective of reform, is to create a safer environment for your banks. Support them, not restrict them. Regulate them, but don't suffocate them. I would say you need a bank of well-capitalized. You need to, bankers sitting here are not going to increase their capital out of their own will. And it needs to be regulated and put through on stages and a period of time that allows to do that. Also, bankers will not clean up their MPLs properly unless they are forced to do it. That's not just Tunisian bankers. The bankers all over the world will do the same. You need a proper liquidity management, proper risk liquidity management that operates at a sustainable level of mismatches. You also need a system that gives confidence in the individuals, to the lenders, to the borrowers, to the all market operators. Without this confidence, you will not be able to achieve what you want, because you will always be worried that deposits will go abroad. People will be like Egypt, sitting on putting the money under the pillow, because they don't trust much the banks. They know there is a problem. And it might surprise you, though we talk about illiteracy in our countries, I think our people are very socially smart. You also have to remember, we all have to remember that reform takes time. This is a revolution that we're just 2 years into it. It takes hard work. It's not something that you can achieve in a day or two, but you need to have steps to achieve what you need. You need to walk towards a goal where you are all, as a consensus, whether market participant, society, I'm not going to say at large, because you can't get an agreement from the society at large. But you need to move still within a democratic framework if it's manageable to be done. So I'm going to focus into 5 main things when I talk about reform. I talk about supervisory reform. I'm going to talk about prudential reform, i.e. the bankers themselves. I'm going to talk about enhancing market forces rather than administrating market forces. I'm going to talk about enhancing competition, which is the point I highlighted, the competition that adds value rather than adds numbers. I'm going to continue to talk about a legal framework and an institutional framework that allows quick settlement of problems, debt issues, without any political interference from liquidating a famous businessman or a politically connected businessman, because these are all bad practices that needs to go out of the system. So let me cast a quick eye on the supervisory one first. I told Mr. Governor yesterday, why don't you operate or bring somebody like a model of the FSA into the Tunisian market? And I had a very one-word simple answer. And it was actually, why not? But it needs to be studied, which is right. The model is being not copied by the FSA only, by the way. I'll give you Lebanon as an example. They have a banking commission where it looks and regulates the banks, and it reports under the umbrella of the central bank. And I think this will free the role of the central bank to much more important things sometimes than getting the system politically influenced. Let it be regulated, enhance your internal audits, which is the point, highlighted. You need to, and your off-site surveillance, enhance the people that does this job. Apply the basic rules of rating your counterparties using what I call Camel's approach, which most of you would be familiar with: the capital adequacy, the asset quality, the management and earning liquidity, and the sensitivity to market for risks. Take steps towards those, and I think you will strengthen your corporate governance. There has been some steps about adding 2 independent directors, dismantling or looking at different units for controlling risks. I think all of these are nice makeup, but it needs to be really enforced properly with all what corporate governance really mean: protecting of minority interest, reducing the influence of power, whether that on the ownership or the executive influence part by the owners of the business, whether they're public or private. Now to my colleagues, the bankers in the banking sector. You have to work hard on risk management, classifying the classes of risk, pricing your risk, and these are not easy things to do. Even in a modern world, it's not easy to do. But it's step by step. You operate in a very classic model of banking. Excuse my English when I say the old-fashioned banking, which is not a bad thing, by the way. But you need also to operate within much tighter capital, in the sense of enhancing the capital is not just by raising capital in the market. It actually can happen through different routes, shading assets, and there is a cost for that. The cost of risk will increase, and this will tighten probably some of your appetite. But this is not what you want to achieve. You want to help the economy to grow. So you need some regulatory influence as well to help you achieve what you need. Competition is, I think, a point I already walked through it, but it's very important to operate within a level ground competition with everybody. So the rules to apply to the state-owned banks are the rules that applies to the private bank, and there is no exceptions. And whoever goes an exception, I don't have to kill him. I can go and talk and see what can I achieve. Market forces. We need a market determined by pricing the government securities, reducing the administrative interest rates, and also you need a market that allows facilitation of payment and settlement, much bigger transparency and disclosure. These all will help the market to develop. The last one is the legal measures and institutions. What I thought a lot of bankers say is we need new business routes, because the traditional one of lending is not really working at the moment. Well, in fact, you need few things as well. You need to be able to create what we call fee income business. Whether that is in the derivative format, or whether it's that in the much lesser structured format, or whether that the private equity or the financial market, which is not deep enough to allow that. Which I think there's a second panel today which will probably dwell into that much in details. But one source of fee-generating income, assuming, is to set what we call debt recovery business. That's one. Restructuring business, which is required a lot. Those will, an advisory business to get your big corporates championships of the economy. Where is the markets to go to? What are the really opportunities there? What can you explore? And how can I help you to achieve that? I've talked long enough, but I would like to thank the hosts, l'Économique Maghrébin, and I would like to thank you all for your patience for listening to me that long. And I've had the pleasure to come to my friends and my second family here in Tunisia. I wish you all the best in your progress and reform, and God bless you all. Thank you for having me.
Thank you, Achraf. Thank you very much indeed. Pris beaucoup de retard, mais c'était tellement intéressant que je n'osais pas du tout intervenir. Il y a eu un certain nombre d'éléments qui ont été évoqués par Achraf, notamment la comparaison qu'il a faite entre l'Égypte et la Tunisie, qui vise un peu la situation en Tunisie et surtout quand il a parlé du processus de réforme à introduire en parlant de la nécessité de le faire par étapes. Je voudrais juste lui dire qu'il est dans le pays où la politique des étapes fait partie de l'identité nationale. Et donc, vous pressez des convertis à ce niveau-là.